going on, YouTube? It's Brendan. I'm back from Market Makers for your Sunday kickoff show. Now, some of you are watching football, but you need to look at this video and watch these charts because this is going to make you money. Not making money watching other people play football, unless you're gambling, which, I do partake in from time to time. But having the Jacksonville Jaguars as a home team is not it's not a good way to win money unless you're betting on losses. But guys, a lot of people ask me, and I want to talk about it in this video, what am I buying? I don't give financial advice, obviously, so everything I say is based on what I'm doing. I'm buying at the end of this, which is next year, at the very bottom of the bubble. I'm looking at September, October, remember. Watch that 35-minute video I made earlier last week, mid-last week. It's called Wall Street Panics. It's a JPEG of a 1929 newspaper after the great crash. But guys, to me, and I love this company, so let me go ahead and preface this, okay? The last great bubble right now in the stock market, one of the last great bubbles at least, but maybe the last great bubble is Tesla. Now, I've had a Cybertruck on order. I'm on pre-order from day one when it came out. I want that thing. I love the company. I know some people love Elon. Some people hate him. Very happy he bought Twitter. I wish he would have messaged me. I would have told him to wait 2 months. He could have got it for 75% less, but he's overpaying for it. But it is what it is. But why is Tesla the last great bubble, and why would I buy it? Guys, this company, in my opinion, from a fundamental perspective, which I don't do fundamentals, but looking into the future, it is a futuristic company. They have awesome margins. Their margins are 2 or 3 times out of any automaker. Plus they have Starlink. Plus they have all their side businesses. And Elon's just very innovative and creative. And there's always a ton of FOMO behind things. I'm looking for things to buy that will go up quickly in a bad environment. So that's what I'm looking at. And the way I'm doing that with Tesla, guys, is I'm going to look at it with fibs. We're going to talk about this because Tesla right now, when you look at Tesla, let's just look at what's the PE of Tesla. So I Googled this real quick before starting this video. PE ratio as of October 2022 is 71.6. This got up to as high as 571. I mean, literally the definition of a bubble, okay? Price to earnings, 571. So let's talk about this for a second, okay? Because 71 PE. So after the great financial crisis, I believe the PE of the S&P was like 9, okay? 9. Tesla's going to come down a lot. And you can believe that or not believe it, but just look at this meteoric rise of where it went to. Let's just go to that pandemic low. Pandemic low up to its peak. Tesla was up almost 1,700%. 1,700%. Reason I'm bringing this up is A, I'll be buying it at the bottom, but B, Tesla reports earnings. Guys, the markets are going to pivot again, okay? They're either going to, well, I should say, either have a continuation of trend to the downside, or they're going to reverse and give us some double bottoms to the upside because this is earnings week coming up, okay? We have Bank of America reporting Monday, Tesla on Wednesday. This week and the following week are going to be the bulk of the companies reporting, and you're going to see the market reaction to these earnings. Are they worse than expected, better than expected? On top of that, what guidance, if they do give guidance, what guidance are they giving going into next year? Are they looking at layoffs? Are they looking at a weakened economy? Are they factoring in a recession? So Tesla has a big way to go down if it's going to keep up with the rest of the market. And let's just look at this. So right now, Tesla's down 50% peak to trough, okay? Let's take our trend-based fib. Let's get our trend-based fib, and let's go ahead and get a wave projection down, okay? We'll get a wave projection here and look at some targets. First of all, is this trend-based fib accurate? Remember, we're calculating an ABC projection, right? The law of 3, market moves in 3s, Dow and Gann. That's what we're basing this off of, right? Look at where price is on the weekly time frame. 203 is the one fib, a 100% retracement from the move. Price is at 204.99. I'd say this looks pretty accurate. You start looking at your layout here, looking at the 382 up here was used as resistance. You can see 618 was used as support, and then falling back down with this double top, right? You have a gap right here as well. So is Tesla going to report some good earnings, give us some more upward momentum, or are they going to just bottle around here and start falling down? Notice their 200 and 233 of Tesla is down here. Now the Nasdaq, remember, lost its 200, 233 on the weekly. The S&P lost its 200. The Russell lost its 300. Okay, so Tesla is still holding up relatively well, all things considered. So what are our price targets here? Well, if we start breaking down, we're at 204.99 spot 99. The 1618, guys, $91 spot 17 cents. This brings you back, and you're still above your pandemic low, okay? Because remember, this is a trend-based fib projection. You're still above your pandemic low. Now, the reason I like this stock, other than the reasons I mentioned before, is the FOMO factor, guys. You start looking at things as a technical analyst here. Let's go ahead and open this up some so you can see the volume. So back here with your pandemic low in March of 2020, you can see your volume spikes, right? This is still average volume. The only 3 sigma bar you had here was on this initial run up, okay? Other than that, this is all average volume. Your green volume, this is all average volume. And if you look at this versus the actual chart, okay, and you start looking at this with trend lines and things like that, you can see that you don't have necessarily a lot of strong volume. You don't have any 3 or 4 sigma candles at all, okay? It's just regular volume to null volume. And this is a Nasdaq, this is Tesla here on a regular chart. This isn't a FX exchange or anything, okay? But you can see this. So you have this great uptrend. You have a lot of FOMO buying. So when you're looking at price, and that's what the RSI does, is measure relative price. But the MFI, which we have here, again, this is something you get for joining our Discord, as well as the EFI, the Elders Force Index. They take price and volume calculations into consideration. EFI looking at the force of the move. This is Alexander Elder. He wrote a book, Trading for a Living. Great book, by the way, if you guys want to check that book out. But you can see here, let me get rid of this trend line because now it's going to bother me. You can see on the MFI, got multiple overbought signals, right? On these big waves up, multiple overbought signals, including up here at the peak. And since then, you've been trending down. Now, the EFI totally lost the force of the strength of the move, okay? Your median line is down here. So you've never had a lot of strength behind the move. So you have people bidding up the price in FOMO, right? Tesla pulls back, so much FOMO. People call this, I think Michael Burry called this the ultimate meme stock. Now, Michael Burry tried to short this and he got in at the wrong time and he got hurt by it pretty bad and got out of it. But this is a great stock, okay? So when I short something, doesn't matter if I like it or not, I'm looking to make money. But what I'm looking at, guys, is losing the 200, 233 at a minimum, coming down to 91 spot 17, and this could easily come down more. Now you have that caveat, right? You have that caveat of people love this stock. So maybe it'll hold up better than some others, which if it gets to 91, it's holding up better than some others because everything else, as you guys know, is going down a lot. Okay, this is a 78% move. 78% move to the 1618 from its peak. And where is it at from now? Well, let's look at this. For Tesla here, this would be another 50% down move. Now, just like with everything else, when everything bottoms and rallies up, you're going to see Tesla rally up, and that's going to be the time I'm going to look to potentially short it. I don't typically short individual stocks. I like to short the indices, okay? That's my method of trading because you can have stocks obviously move up or down independent of the indices. Same way with altcoins moving up or down independent of Bitcoin. But in general, guys, where I will be buying this or looking to buy this is after the markets really start breaking down and showing a lot of weakness down here at 91 or lower, okay? Looking at Tesla on the daily, you can see we laid this out as well. Your daily, your 200, 233 are above you. Again, bouncing beautifully off of the 618 here at 205 spot 01. Now, if we want to look at upside projections, if Tesla does bounce up, and we're going to, I'm showing Bitcoin next, and then we're going to get into the equity, the indices. If we're going to get some upside projections here, we can use some of these same candles, pull this down to the base. And then let's clean this up so they're not all overlapping on each other. Let's get rid of that 382. And then we have 385.6. There we go. So you can look at this. You're getting rejected right now off of that .5 fib, right, to the downside. Your 3 to the upside's up here at 246 based off this trend-based fib. So if you started getting some more momentum, and a 618 is up here at 270, right? So that's the base. You see that? That's the base, the neckline of your previous double top structure. So if Tesla has good earnings, you could see Tesla rally. And if we see Tesla rally, that 618, if I do look to short this, is right there with what? Always looking for confluence. Your 200, 233, and your 618, okay? So that's my view on Tesla. To finish my thought, I'll be buying Tesla at the bottom. I'll be buying gold at the bottom. Not buying silver because I have a lot of silver already, but I'll be buying gold at the bottom, which I have at 1425, and then I'll be buying Bitcoin, and then hard assets like looking at depressed real estate here in Florida, post-hurricane, post-housing crash, okay? Let's go ahead and jump to Bitcoin, and we'll go back to the equities. You guys have been patient. I wanted to go over Tesla because I think it's going to be a really good opportunity for everybody, and I think it's going to be an awesome opportunity when it sells off, okay? And I wanted to give you guys an idea of where that's going to. Again, Bitcoin on the monthly. On the monthly, you lost your 786 at 19,891. You're hovering down here at 19,151. So let's talk real quick as we get into Bitcoin. Looking at, the outlay here again, earnings this week, next week, going to be big movements potentially in the market. Bitcoin will fall when the Russell falls, okay? When the Russell sweeps its lows, that's when I'm looking for Bitcoin to fall as well. And when you look at that layout, guys, we've been talking about where Bitcoin could stop, out at the extra fib levels here. Obviously, you can come down, you're at below the 18,891 now. You can come down to the 16,284. This is a monthly time frame. We're going to look at this in smaller time frames. The one fib at 12,173. And then you have like the one spot 128 obviously at 7,556. But we have this laid out on the weekly with the trend-based fib projection, so we'll go ahead and look at that there. But I want you to see this picture because, again, what did Tesla go up? Almost 1,600%. That might have beat Bitcoin from the pandemic low. What did Bitcoin do? 1688.49. That's really close. 1688.49. Let me see what this was again. And let's go ahead and go here. 1688.49. And let's get this exact 1673.83. Like a $20, $30 difference between Bitcoin's parabolic rise and Tesla. That's kind of crazy when you think about that. That's really crazy when you think about that. As parabolic as Bitcoin is, Tesla matched it. That shows you how much FOMO there is in Tesla, okay? Always looking at opportunities, guys. Again, Dante's Descent, this pattern's still tracking true. We'll see if it comes down and meets our target here at 10,591 to 12K based off the trend-based fib. Watch Wall Street Panic's video from last week. Go over all that in detail, how to read this pattern, how to understand this pattern. And of course, when this pattern does bottom, wherever this is, going to be looking for that 50% up move based on the up moves in the previous trend, okay? So we'll be tracking that as well. And if you zoom in here on the weekly, you can see I basically have this neckline here at 18,603, and we talked about this last video, the descending wave pattern, the lower highs you're making over and over again, looking for that to break down. If earnings disappoint, if guidance disappoints, you will see it start to break down. Looking at this on the daily, a couple different things here. To pump up to the 200, 233, you got to get up to 27, 28K. And Tiger, be quiet. And you have to get up this high. And, that's just not, even if earnings don't disappoint, if they're, I don't see that type of momentum possible, okay? And when we look at this, again, we've measured this a couple different ways, but if you take this from that 17.5, the base, the low, and do it this way, you're basically be pumping up to your one fib or just above it, maybe the one spot 128, something like that. But this just doesn't seem like it's going to have that much momentum. Again, Bitcoin being considered a risk asset by the large fund managers, okay, and the money managers. If we look at this from the downside projection, we could take a tighter wave here if you want to see maybe a more realistic rally. We do have a bearish cross on our 5 and 21. And here's a anchored VWAP I had thrown on here, which is priced right at about 20,102. But if we do a tighter wave projection here like this, you get the one fib at 20,418. Okay, that might be a good target if we get some type of rally, put you back up in this range where you could potentially short again if you start failing, getting supply dumped on you. The 1618, and this is more realistic to me if a larger rally does occur at 21,852. Okay, this is the 150 moving average moving into the Wyckoff box as well. But again, Bitcoin to me is just really holding on for dear life. And when you look at this on the MFI and the EFI, these are both fractal trade 15 indicators custom designed for our room. Again, they're gifts when you join our Discord. The join button is right underneath this video if you guys do care to try out the room. Fantastic community. If you look at this, so everything's flat. Median line, there's no force behind the move. And if you look at the money flow, you made a double bottom and your double bottom's rolling over. Okay. So right at the median line. So everything looks really flat. Again, Bitcoin is essentially just waiting and patiently waiting, I should say, for these earnings to come in. Let's look at this on the 8-hour time frame. 8-hour time frame, nothing really different here. Let's go ahead and go to the 4-hour time frame. 4-hour time frame, you can see your 200, 233, your 5 and 21. Again, bearish here on the 5 and 21, trying to slope back up to the upside. Let's go ahead and turn these off so you can see this. Get rid of that. Oh, that's the 200, 233. Let's get rid of these two. And you can see your 200, 233. Now, if you look at this resistance here for the upside projection, 0.5 at 19,261, 618 at 19,535, and that gets you to just above the 200 on the 4-hour. Remember, why is this important? We've been over this numerous times, beating a dead horse, because we shorted up here. I've made many videos showing you how many times a 200, 233 in a primary downtrend provides awesome short entries for Bitcoin. Okay, I mean, look at all these times just here in recent trend going back to September 27th. Okay, and these are big trades. These are big trades, especially when you apply some leverage to them. So, you know, this would be great if it does pump back up, if it gets some type of velocity, makes some contact, maybe makes a shape. Love to see it. This is just so easy when it does a clean double top like this, right? Starts going sideways and then fails. That's so easy to trade. So if it does that again, look out for that, guys. If it doesn't, you could just see it start going down if everything else really starts capitulating, if the earnings are really that bad. You know, October again, multiple crashes in October, including in 1987. And you have to think about, you know, there's always that potential, that outlier possibility for a crash whenever you have a weak Friday. We had a weak Friday again. You can always have another Black Monday. So always be aware of that, guys. You have to understand what's happening with inflation. You have to understand what's happening with the macroeconomics in the world. Inflation is not under control. As a matter of fact, the core, the PCE inflation is the highest it has been now in 40 years. That's different from the headline inflation. The headline inflation is what normal people look at because that includes food and energy. Core is food and energy stripped out because the Fed doesn't care if you starve to death. Your politicians don't care if you starve to death. They don't care if you can't fill your car with gas, okay? So they only care about the core inflation, and that was twice the expected gain, okay? That was twice as much as they expected it to gain. So inflation is accelerating still. It's still in that acceleration phase, and inflation moves in waves. And so having this high inflation, you have to understand the way that we brought this down before with Paul Volcker is we had real rates. You have to have rates, according to the Taylor rule, John Taylor, you have to have rates above the actual rate of inflation. So with this next rate hike coming in November 2nd, we'll be right at about 4%. Inflation's above 8%. That's how far off the Fed is. When we had 13.5% inflation, which remember, Larry Summers went back, used the same CPI we use now, back on that inflation, they both came in at the same number, whatever that was, 8.5 or 8.8, whatever the highest read was so far, or 9.1, they both came in at the exact same number within 0.1 of each other if you apply the same metrics for how they calculate inflation today. And Volcker took rates to 20%. 20%. 600 or 700 basis points above the rate of inflation. That would mean we'd at a minimum to be above inflation, we'd have to be at 9% to 10%, another 600 or 700 basis points from here. And to get really some velocity for inflation to come down, we'd have to be closer to 12 or 13% on our actual rates. And that's not going to happen. Obviously, right? That's not going to happen. So again, the Fed's gambling. And the reason that you guys hear like Ray Dalio, you hear Jeremy Grantham, you hear some of these other forecasters that put their money where their mouth is and had made billions of dollars talk about what the next 5-10 years looks like, is because even if you just do a case study on the 1980s, even after Volcker raised 20% on the rates, it still took 2 years for inflation to come down to 3.2% with 20% rates. Okay, it still took 2 years, and for the majority of the decade, you only had a couple of years where inflation actually got down below 2%, which is the Fed's stated target, is to get down below 2%. So that's why you hear Jeremy Grantham say, if you watch my video, we're going to have a period of stagflation, much like the 70s, where you have inflation always a backdrop. It's always there, whether it's 4%, 5%, 6%. It's going to peak and ebb and go back and forth. And Dalio's saying the same thing. And overall, what is that going to do? It's going to hurt your assets. It's going to hurt the equities that you invest in and the cryptos that you invest in, which is why it's so important to try to nail a bottom. Because I do think when we hit a hard bottom, a real bottom, which as you guys know for Bitcoin for me is 3,956, using Dow theory, we went over that in the Wall Street Panic video, a complete round trip back to that pandemic low, you're going to have an initial spike back up, which is good because I want to be in the black. I don't want to be red for 3 to 5 years in Bitcoin because I buy it at 20K and it goes all the way down to 4K and then it fluctuates between 4 and 10K for the next few years. Like, I don't want to be that guy. And so many people are going to be that guy. I mean, look at Michael Saylor. His average price is over 30K still for all the Bitcoin he has. He might not see that 30K number again for 5 years, for 9 years, for 10 years. Who knows how long it will take? It took 13 years for the Nasdaq from the dot-com crash to break its all-time high. It took over 30 years after the 1929 crash for the indices to break their all-time high. 30 years, okay? 1989 Japan, the first multi-pronged bubble, housing and equities. 1989, they still have not beat their all-time high from 1989, and that is today. And this is our multi-pronged asset bubble, housing and equities, and you can throw in bonds, but just keep it simple, housing and equities. How disastrous will it be? Next year is going to be the big declines. But just keep that in mind when you're watching crypto, okay? Because what we're looking for is that tradable bottom for the rally because we're already shorted up. We're already in our shorts. And if we do get some more, any type of rally, big rally, whatever it is, it's a rally to fade in my opinion. So that's the 4-hour time frame. Let's go ahead and jump over to equities. Oh, let's do DXY quick. DXY did pull back. So the 10-year yield, I believe the 10-year closed above 4. It's like 4.005 or something. But that's the first time, I think, since 2008. Didn't something happen in 2008? Not quite sure. But I believe that's the last time that it closed above 4. So that's where the 10-year yield got to. So if it stays that way, it'll be interesting to see what happens this week because the markets are going to be weak. And if you look at the dollar's at 113.298. And, you know, relative to where this came from. Remember when Bitcoin made its all-time high, when the indices made their all-time highs, the dollar was below 94. Okay, it was below 94. It was down here. It's at 93.5. It was down here. So when people say, oh, the dollar's showing some weakness, they're literally talking about this like little move here. Okay, but you got to get way, way down there, like 18% further down to even be where you were at when the indices were pumping up, okay? And not to mention you don't have that money flow going into the markets anymore due to quantitative tightening and rate hikes, okay? So we could ping pong around in here. Again, we are at 113.298. I wanted to see us get up to the 618 at 116.847. We'll see if we just take off. That may not happen until November 2nd rate hike when they go ahead and do another 75 basis points. We'll see if the trend continues. Every time they've been raising rates, obviously the dollar takes off and then it levels off somewhere, bounces around, then they raise rates and the dollar takes off. But keep in mind, when we got to 121, Y2K, that's when the market's cratered, okay? Doesn't have to happen there. Could go higher. It could happen down here. Doesn't have to happen at all, but it's about patterns and probabilities. Let's look at the S&P. Zoomed in on the weekly. As you can see, we lost the 200, floating on that 233. And remember, we're going to get volatility here, at least if we follow the previous patterns. We should have some volatility here. But looking at the S&P, where did I put it? There it is. The S&P, you can see we hit it. We bounced below it. That's a 618, 35.93. We're at 35.83. You know, and this is the rally part that I'm talking about, okay? So if you guys are going to be trading on SimpleFX, definitely check out SimpleFX to trade these equities and commodities and Forex as well, okay? Link in the video description, and BitGet to get into Bitcoin. Link in the video description as well. It helps support our channel. Really do appreciate it. And of course, check out our Rumble. You can literally just type in Market Makers on Rumble and we come up now. Okay, that was the search problem that we had before. So you can type in Market Makers on Rumble, find us there, follow us there, and check out our sponsors, check out our room. All right, let's continue. And if we look at this, so what we could have, if these earnings, which I have no idea, obviously, but if the earnings coming good or better than expected, you could get your rally up, right? We're looking here at the weekly time frame. Let's get some numbers. Let's take a trend-based fib off that swing low, because this would be your double bottom structure, right? Down to that, up to that swing high, down to that swing low. I'd be looking at 39.14 with a good strong rally coming up to 39.14 at the 618. You see that? So that's where I would anticipate this would get to. And then you have a couple, maybe a weekly candle up or 2 weekly candles, and then come back down again, okay? Basically, these types of wave patterns that you're seeing over and over again on the S&P. Now, obviously, if it's just bad, right? If these first set of Bank of America reports, now the financials were mixed. I think Citi, I don't remember, was it? No, it was Morgan Stanley didn't do well. The other couple banks did well. JP Morgan did well. But Monday's more financials. I actually pulled this up. Let's look. Weekly earnings. I know Tesla is on Wednesday. Let's go ahead and scroll down here. Let's see. Monday. Let's get the Monday. Bank of America, a lot of financials. Bank of America, these are some other notable ones. Mellon, Charles Schwab. Tuesday, what do we got for Tuesday? Tuesday's Netflix. That'll be an interesting one. And then some other noteworthy companies. You got some grocers in here, Johnson & Johnson. So you have some pharma. You got Goldman Sachs, some more banking, airlines. And then Wednesday, obviously, is Tesla. And with Tesla, you have Abbott Labs, some more pharma, IBM, PPG. So it's going to be, we'll see how this does. It'll be really interesting to see. At least I'm excited to see how it does. Going back here to the S&P. And if it does just start faltering more because these earnings just start coming out bad, or sentiment stays super bearish, uber bearish, then watch for this to fall down further, okay? And we have our fib targets, again, 31.41 for where I'm looking for a rally down here right above my head, 31.41 on the weekly time frame. And let's go ahead and go to the daily. It's a double bottom structure we're talking about. And again, if you have that upside momentum, you could see this is a tighter fib wave projection here, obviously, than on the weekly time frame. But you could see some more recent targets. This is the big reversal that we had, the up and down days. 618 at 36.41 because price is at 35.83. And then the one fib at 37.36. 1618 at 38.89, which is really close to the 618 on that weekly time frame, okay? So if this did rally, I'd be looking at something like this. If this rallied, if we had good numbers come out, something like this to potentially look at another area to drop this back down again. And let's go ahead and fast forward. Let's go to Nasdaq. Nasdaq, still have my drawings from last video. Nasdaq, again, closed, okay? 3 weekly closes now on the weekly time frame below the 200, 233. We're going to hit my target, 10,179. At least I'm pretty sure we're within 500 points of hitting this target at the 618, okay? So this pattern looks like it's going to play out beautifully, guys, and I've been showing you this pattern since August, okay? As soon as we had this top, we have this down move, and then we'll be and again, we could overshoot because the 300 is down here. It all depends on the next couple weeks of earnings to see what this wants to do. You could overshoot, come down further, and then correct back up, okay? And then we might only be coming to the 200, 233 and not up here to this 618 at the 118, 11,831 spot 7. We'll have to see. Let's look at the Nasdaq on the daily. Again, tighter wave here, looking at the upside projection. If we look at the upside projection, the 618 is at 10,944, one fib at 11,264, 1618 at 11,782, and that's the same number I would be looking at if this did rally with better than expected earnings, is something up here, okay, looking for some topping action. Of course, we'd be talking about it, because it wouldn't be a one-day event, at least, I hope not. We gotta have some time to set up some trades. But you can also look at this on a downside projection, okay? NASDAQ, since it is breaking down, everything is breaking down, You have the zero point 0.5 fib. I got to turn that 382 back on. Let's go ahead and do this. It's going to be another long video, guys. It's almost a half hour. You're at the you passed the 382 at 10,720, 0.5 at 10,574, 618, which look at that. You wicked it, right? You wicked it before at 10,427. That would be a good target if you still get continuation of trend here, looking to see if you can hold that 618. And if you blow past it, the one fib at 9,953, notably below the GAN 45. Again, a bearish term or bearish trend at that point, a long-term trend on the daily. Looking at this on the 4-hour time frame, you can see that you have just price, price rallied up, price dumped back down. It's just a zoomed in view here of the daily time frame. So try to keep this shorter. So let's go to the weekly on the Russell. Again, Russell 1, 2, 3, 4 candles below the 300. Using our double S curve for support, 1521 is still the target. That's at the 618. We'll see. Maybe it only gets to the 0.5. Maybe let's see where that 0.5 is actually. But, again, it's all going to depend on the velocity of the earnings, how much they drive the price down or up. So the 0.5, you're really close to the 0.5 already, which is 1618. You're at 1639. 1521 is still definitely within the realm of possibility. Trading at 1639. It's only a few bad trading days, literally. And you got a couple of weeks of earnings coming out. So we'll see how that goes. And on the daily time frame, Russell tracking beautifully in this Fibonacci fan that I laid out, tracking beautifully here in Wyckoff. This is an upthrust, 618 at 1671 here. And then the, where are you at now? 1671. And then looking at what is the projection? Let me turn that off. If we broke through Wyckoff, broke through the 618 here on the downside, looking at the one fib at 1618, there's the same numbers again, guys, laid out the same way from the larger time frames. So let's look at Russell on the 4-hour, if that's anything interesting. Your 200, 233. This is volume weighted. I did a volume weighted 200, I believe, so you can see it laying right on top of the candles. This is a VWAP line as well. And if we look at this, same numbers you're going to see here, 618, 1671, one fib at 1618. So let's go ahead and keep moving forward. We did Bitcoin. What else we got here? Let's look at Ethereum. Ethereum's flat as well, guys. It's hovering on the 618 at 1282. Again, we have this in Wyckoff here on the 4-hour time frame. You have your series of up thrust. After your up thrust, you're getting signs of weakness, which is expected. After your down thrust, getting signs of strength. And you've been rotating this back and forth. People that like to high frequency trade have been trading this back and forth, up and down, up and down. But, notably you're making lower highs, right? So here's your next lower high. And now you're just holding on for dear life right here at 1282. And you can look for this. If this starts pulling down, just to give you some price targets, you can look for this here to go to the 1618 at 1134. The one fib is at 1225. And you already previously got down to 1185. Going to XRP. XRP's holding up better than some other things. Still have a lot of volatility. Some sharp traders been able to trade this very well. Posted a trade for this, obviously, we talked about before in the room. That nice sell-off. And XRP it might be due to the legal news that's coming out, or just interest in the project, I guess. But bouncing beautifully off the 0.5, which is the top of your Wyckoff right here. But again, overall, I don't anticipate this strength holding up if the other markets do pull down hard. Okay, and actually, a lot of the best assets to short are going to be assets that had higher than relative pumps. When everything else is kind of dumping or going sideways, if you find assets that pump, they tend to be able to pull down harder, case by case basis. But it is just something to pay attention to due to the fact that they did pump up. They'll end up giving that pump back, which would put you back down here, potentially at the 33-cent range, back down in this range. Okay, so you can watch out for that as well. And gold, gold had its sell-off. Gold's bouncing off the 1641 right now. The 618's at 1644. I think I had this on a weekly chart. No, I didn't. I'll put up some gold weekly charts and looking at gold and looking at silver as well. So looking to see if this does want to return back up to its long-term support area over here, which is now resistance 1672, and love to see it do another structure like this, a double top type structure. coming back up towards the top of this Fibonacci fan, something like that. This time I don't want to miss the short on this. And it's actually also give you just another variation of a larger double top, right? Always look for your double top structures in descending markets. And silver, guys, 1618, 1792, spot 92, 17 spot 92. You've visited this before, and unless you pull up with some velocity, you may be pulling back down to that number relatively quickly. Okay, so pay attention to that. Oil, all this was close, and this is unchanged. We went over this on what was it, Friday's video? Yeah, Friday's video. So you can see we pumped up to the bottom of Wyckoff at 93 spot 97, and we rolled back down, and now we're at 85.67. You could easily come back up here, try to retest, right? Give you that classic double top type structure. So you can trade this on SimpleFX too. Just be aware, oil, because of oil with all the news, guys, just be careful because supplies are being cut, but demand is also shrinking. So you got to find that equilibrium, see if this holds up, or see if you can break out and find a new way to get back into closer to $100 barrel of oil, which is where I think the Saudis and everybody else, the oil producing countries, want it, is between $95 and $100 a barrel. All right, guys, another 35-minute video. Hope you get some good use out of this video. I'll answer your comments as always there on YouTube. Please do like and subscribe. Hope you guys have a fantastic rest of your day watching football. I'm going to go make some boiled peanuts and see what's on the TV myself. All right, everybody, take care. Talk to you Monday.